All right, you guys, in today's video, I'm going to be talking about risk management, which is one of the most important, if not the most important aspect in trading, right? So I'm here to tell you guys, I'm very, very, very transparent. You can ask all my students, I'm very transparent. And I'm here to tell you guys, if you have a bad risk management, you're not going to last in trading, right? It's probably going to take you like 2 months, 3 months to blow your account. And then you're going to call this a scam and then you're going to quit, right? But if you have a proper risk management, if you trading not like you are going to the casino, not like you are gambling, best believe it, guys, you're going to be trading for a long, long period of time. Also, I'll be talking about the importance of having a good risk to reward ratio as well. This is why I provide my students a trading plan the minute they join the mentorship program because it is very, very, very crucial to have a proper risk management, right? I always ask my student, right, how much do you have in your trading account? Based on what they tell me, then I go on ahead and create a proper trading plan that they must follow to the T. Because if they don't follow it, they're going to blow that account and they're going to lose a lot of money. Please pay attention to this video, guys, and please take time to take notes as well, right? Risk management. Why risk management is very crucial in trading, right? The reason being is, guys, right? Let's say if you decide to add $1,000 in your trading account, right? Let's say 1,000, right? $1,000 in your trading account, right? So when it comes to trading, guys, right, you are going to take losses, right? If someone tells you that, hey, I've never lost any trade, I have 100% winning ratio, trust me, that person is lying to you and that person is trying to scam you because we all going to lose trades, right? But you must be able to manage the risk at all times, right? If you have 1K in your account, right, what I recommend my mentees is to risk, right? Risk about, right, 1 to 5% per trade, right? 1 to 5% per trade, right? So let's say if you decide to risk 5%, so you'll be risking $50 per trade, right? So if that trade goes against you, you're only going to lose, right? You're only going to lose, right? Minus 50, right? Which is 5%, which means you're going to have about $950 left for you, right? For you to take more trades, right? But imagine if you have a bad risk management, imagine if you decide to, if you decide to risk about 50% in one trade, right? When it comes to trading yet again, guys, there is no guarantee. That's one thing I want you guys to understand as well, right? Do not listen to all these gurus telling you, they have 100% winning ratio. So if you join my signal group, if you join my program, you're going to make a lot of money. Yes, there's a good chance you're going to make, right? There's a good chance you're going to make a lot of money only if you have a proper risk management and only if you have a proper proven winning strategy as well. So let's say if you decide to risk 50% of your account off of one single trade, which means, guys, you'll be risking literally $500 in one trade, right? $500 in one trade compared to $50, right? And please write this down. If you lose 50% of your account, you need to make 100% for you to get back. So which is crazy, right? This is what I recommend, guys. Only risk 1 to 5% per trade. If you lose $50 off of 1K, I'm comfortable with risking $50 off of 1K account. I'm still going to have $950 left to trade, right? That is pretty much how risk management works, right? Is you pretty much risking less and trying to make more. The main goal of having a proper risk management is to minimize your risk exposure as low as possible because you're going to take losses. Always stick with 1 to 5%. Never go above, I would say, 10%. Some people might risk 10% per trade and they are okay with risking $100 per trade, which is, if you risk 10%, you'll be risking about $100. And if that trade goes against you, you're still going to have $900 left. But I stay between 1 to 5%. So now let's get into the juicy part, which is, the stop loss, take profit, and risk to reward ratio. So risk to reward ratio, having a proper risk to reward ratio is very important when it comes to trading, guys. It's because, like I mentioned before, you are going to lose trades. Most of the time, you're going to lose more than you win, right? So there's this one guy on Wall Street, I forgot his name. I believe he has like a 40% winning ratio, which means if he takes 10 trades, he's only going to win 4. But guess what, guys? The guy still makes a lot of money in the market, right? The reason being is he has a great risk to reward ratio, right? As for myself, right, and for my mentees, we have a 1, 2, 3 RR, aka risk to reward ratio, right? The reason being, guys, right? Let's say if you decide to take three trades, right? You can literally lose two trades out of three, two, two losses, and one win, right? Just that one win alone is going to get you back in profit. Hopefully that makes sense, guys. Right? If you have a 1 to 3 risk reward ratio, it means if you're risking $1, right, you should aim to make $3, right? So if you lose two trades, you'd be losing $2, right? But the minute you win one, right, you'll make $3, right? 3 minus 2, you'll be up $1. That makes sense, right? If you take three trades in 1 week, you lose two, but you win one, you'll be back in profit, right? If you have a negative risk to reward ratio or even a 1-to-1 risk to reward ratio, guys, it's going to be extremely hard to be profitable because you have to pretty much win every single time. And that is not possible when it comes to trading. This is why I told you guys, this guy is on Wall Street. He has a 40% winning rate, but he has a great risk to reward ratio. And that's why he still makes a lot of money. Do not focus too much on the winning ratio. Focus a lot more on the risk to reward ratio, if that makes sense, right? So now let's talk about stop loss and take profit. And I'm going to show you guys how you can use all that. So you have 1K in your account, right? 1K in your account, right? A stop loss, aka SL, that's a line that's going to prevent you from losing all your money at once, right? Always use a stop loss, right? I'm not going to go into too much details on how to calculate stop loss and take profit and so on, because I have all that in the beginner's guide. So take your time to go through the beginner's guide, and then you'll find how to calculate stop loss and take profit and so on and so on. For some of you guys who don't have access to the beginner's guide, you can find it on my Instagram at Mino Bowman or BowmanFX. I have the link in my bio, right? So for stop loss, I usually use minus 50 pips, right? Minus 50 pips. Pips is the measurement of trading, right? Minus 50 pips, right? Minus 50 pips, right? So take profit is a line that's going to kick you out automatic. So take profit, which is what we call TP, is a line that's going to kick you automatically in profit, right? So yet again, if you have a 1 to 3 risk to reward ratio, 1 to 3 RR, right? Risk to reward ratio, right? If you're risking minus 50 pips, you must be aiming to make 150 pips. If that makes sense, right? So with a 1K account, right, the maximum you should be risking is 5%, 1 to 5%. Just stay between 1 to 5%. Let's say if you decide to risk 5%, right? If you're risking 5%, which means you'll be risking $50, right? So which means you'll be using 0.10 lot size, right? 0.10 lot size, risking $1 per pip, right? So now let's do the math real quick, guys, right? So if you're risking 50 pips, that's where your stop loss is. And then 0.10 lot size means $1 per pip. So all you have to do is multiply, right? $1 times 50 times minus 50 pips, right? That should give you minus $50. Yet again, if you have a 1 to 3 risk to reward ratio, if you're risking minus $50, you must make $150, right? Which is your TP, 150 pips, right? So it will be $1, right? Times 150 pips. That should give you right? $150, right? So, like I told you guys before, this is why it is very crucial to have a 1 to 3 risk reward ratio. This is why it is very crucial to not have a negative risk reward ratio or 1 to 1 risk reward ratio, right? Because now, if you decide to take 4 trades in a week, right? Let's say if you take 4 trades and you lose three, right? You lose 3 trades, right? But you win 1 trade. 1 win, 3 losses, right? So if you go 3 times minus 50, you'd be risking about minus $150, right? So you'd be down minus $150, right? But the fact that you have a good risk reward ratio, right? 1 to 3, the minute you win 1 trade, guys, guess what? You'll be making 150, which means despite losing a lot of trade, you're going to be back at break even just because you win one single trade. I can guarantee you guys, if you take the time to implement what I just went over in this video, man, this is going to change your life. If you're trying to go full time with trading, if you're trying to be a full time trader, guys, you must have a proper risk management and you must have a great risk to reward ratio, right? Don't even worry about the winning ratio, right? Because you're going to take a lot of losses. Trust me when I say this, right? But if you have a 1 to 3 risk to reward ratio and you take 4 trades, if you lose 3 out of 4, yes, you're going to be down minus 150. But the minute you win one, you're going to make all your money back and you'll be back at break even for the week, right? So a good risk to reward ratio is going to keep you guys in the game for the long term.